Okay, good morning. Welcome to Chaikin PowerFeed, your daily market digest. Today is Wednesday, June 13th, 2018. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter at DanRusso_CMT, and PowerFeed TV is brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can get your free daily Chaikin PowerFeed at www.chaikinanalytics.com/PowerFeed TV. So U.S. equities were mostly higher in a quiet Tuesday trading session. Utilities and technology led, while energy and financials were the biggest laggards. Treasuries were little changed. The dollar was stronger against both the yen and the euro. Gold finished down 30 basis points, ending below $1,300 per ounce. And WTI crude settled up 50 basis points. Breadth on the New York Stock Exchange was balanced at 1-to-1, and breadth on the NASDAQ was actually positive at 1.2-to-1. So kind of diving right in as we always do, checking out our key levels. I cleaned up the chart here a little bit. We've been pounding away at the key levels for a long time. So I wanted to kind of clean up the chart a bit, make it crisp, and really just point out what I think is happening. I think we are breaking out of the consolidation. I think support remains at 27.41. I am a bull, but I actually want to see us pull back and test that 27.41 level and hold it to solidify that. Underneath there, 27.10 is support, and then 26.58 to 26.75, and then you have the rising 200-day moving average at 26.50. I think resistance comes into play just overhead, actually, right here at this 2800 level for the S&P 500. That would be 280 on the SPYs, but I think ultimately we break through, and here's why. The RSI is in the process of shifting to bullish ranges. You can see we've kind of broken, we have a steady uptrend here in the RSI. Recent lows have been in the 50 area, and we're inching up towards overbought conditions. I actually want to see us become overbought on the breakout. That would be a signal of strength as far as I'm concerned. And look at the Chaikin money flow indicator here. It's solidly positive for the SPX, for the SPY as well. Institutional investors are coming to the market. So that's an encouraging sign. And these are really the two factors that lead me to believe that we are going to break to the upside and resume the secular uptrend. That's been our base case for a while. For those of you who have been listening for a few weeks now, you've heard me say that over and over again. So your market in a minute every day as a PowerFeed subscriber. We'll give you our kind of high-level thoughts. Stocks add to recent gains ahead of the Fed today. Tech is strong, but comm equipment and electronics are weak, and we'll get into that a little bit further. You know, really the technology sector is up 30% over the past 12 months, but it's really being driven by internet and software. There are pockets of weakness, and I think that those can be masked and create opportunities for investors looking to play on the short side. Sentiment is moving towards greedy as the market lifts, but it's not a concern yet. Fed rate hike is widely expected today, and futures do point to a higher open. So moving over to the power bars for the major indices, we can see the Dow is still skewed to the negative side, but we're going to throw that one out. It's 30 stocks. Importantly, the S&P 500 is fighting to get to the bullish side. We've been watching this for the past couple of days now, where it's bounced back and forth between bullish and bearish. Currently on the skewed to the bulls, 94 bullish or very bullish stocks, 92 bearish or very bearish stocks. And what's happened here, what I've noticed over the past few weeks, is names are coming out of neutral and into bullish ratings. So that's encouraging. NASDAQ still skewed more than 2-to-1 to the bullish side. Small caps still have the best ratio of the bunch. And look, they outperformed by nearly 30 basis points yesterday relative to the S&P 500. That's the theme that I've been harping on. You've heard me say it here for a while. Bonds ticked up slightly yesterday. Yields were really little change. Utilities were strong. I think that's a counter trend move that can be faded, along with the strength that we're seeing lately in consumer staples. So according to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. The major indexes are mixed. Here's your choppy trading for mixed indexes. Your stock of the day today, this is an interesting one, and I will caution right away, it is on the smaller side. It is less than $1 billion in market cap, but it is Glue Mobile. Comes from the other consumer discretionary area. That could be a little bit confusing. Glue Mobile makes mobile games that you can play on your phone. Stock closed yesterday at $5.87, up 6.5%, has a very bullish power gauge rating, ticker symbol GLU. The Chaikin Power Gauge rating for Glue Mobile is very bullish due to very attractive financial metrics, very strong earnings performance, very strong price volume activity, and very positive expert activity. I mean, all four of our factors for this stock are in the very bullish area. So we get our bullish rating, our very bullish rating, and here it is. Strong trend, strong industry. So we know this is the type of stock that we want to be looking at on the long side. and we just need to figure out if tactically it makes sense to own it here. And again, as I said, it is a sub $1 billion market cap company. It's about $800–900 million market cap, but we can see the power bar. The ribbon at the bottom of the screen tells us that we are very bullish here. Stock is outperforming the market, so the dynamic duo is in gear. The market is in agreement with our model, outperforming relative to the SPY with a very bullish rating. We like to see that. And the stock is currently oversold based on our overbought, oversold indicator. And look at the money flow here. Look at the massively bullish Chaikin money flow of late. Institutions really are coming to the stock. It's kind of consolidating here a bit in the $5.50 to $6 level above the rising long-term trend line. But for those of you who invest in kind of the smaller cap names, I think that Glue Mobile is compelling here on the long side. You know, it has everything that we're looking for, right? Very bullish rating, strong trend, strong industry, market in agreement with our model, tactically set up as a long idea. So take a look at Glue Mobile if you play in the sub $1 billion market cap area. Our sector tracker, looking at where the major sectors have moved over the last 5 days. Consumer staples have been strong. I think that is a counter trend move. I think you can use strength in that sector to open shorts or, you know, prune longs from the portfolio, however you choose to invest. Discretionary has been acting well on the back of some strong retail. Healthcare doing well. It's actually our top performer by power bar. We highlighted the materials group yesterday. I think that there's potential for further upside there. Don't like seeing technology as the second from the bottom, but we'll, you know, that's just where it is. We want to see tech outperforming. What is encouraging is I'm starting to see some outperformance from the semiconductors, so that's a positive. Utilities, bottom of the list. I continue to think that that group can be faded. Real estate, I remain bearish there. Energy is kind of tough. I think that oil is going to pull back to the $60 level. That's at least what I'm seeing. And I think that's going to hurt the EMP names, but right now they are bucking that trend. So we're in wait and see mode. As always, we'll be nimble and trade the markets that are given to us. Our industry in focus today is retail services. So you can see the power bar here for that industry, 26 bullish or very bullish stocks and only 7 bearish or very bearish stocks. And over the past 6 months, the retail subsector has outperformed the S&P 500 by 6.28%. Its power bar ratio, which measures future potential, is very strong with more bullish than bearish stocks. It's in the top 1/3, currently ranked number 7 of the 21 subsectors that we track, and it's moved up 3 slots over the past week. So some of the indicative names there, CVS Health Corp, Liberty, Expedity, and Office Depot, all with very bullish Chaikin power gauge rating. So let's dig in on one of these today, and I'm going to give you fair warning. This is another small cap name. It's ODP, Office Depot, very bullish Chaikin power gauge rating. Closed at $2.91 yesterday. Has a strong trend, is in a strong industry. So this is the type of name that we are looking for. However, I think we can wait on this one. Here's the ribbon at the bottom of the screen. You can see that we've recently turned very bullish. However, we're not outperforming the market yet, and that's what we were waiting for. That's our dynamic duo. On top of that, our overbought, oversold indicator is currently in an overbought position. So this is a name that I think you want to add to a watch list of bullish ideas. If you look at, you know, remember this is a sub $3 stock, right? So it's a select audience. I do get that. Money flow is strongly bullish of late. That's kind of a little bit of a change of character. You can see that for the better part of 12 months, money flow has been bearish as institutions have been selling the stock. But now, you know, lately we're starting to see money flow hit some of the highest levels it's seen in the past 12 months. So that is an encouraging sign. For me personally, I'm not ready for this one yet. It's overbought. It's not outperforming relative to the SPY. I really want to see the market in agreement with my model, and I want to see the stock oversold to give me conviction for an entry on the long side. But, you know, we'll add it to a bullish watch list and keep an eye on things. And, you know, when the setup is there, we'll highlight it. Moving now to what's trending. Yesterday's S&P 500 movers. ADP up nearly 4%. That's a neutrally rated stock. AYI up nearly 4%. That's a bullish stock. So that's one we want to kind of look at. kind of see what's going on there. When I see bullish stocks make big moves, to me, that could be the start of a trend, or the continuation of a trend that might be worth exploring. Same thing with a name like Abiomed, ABMD, up 3%. The losers yesterday, this is interesting. APA, Marathon, Endeavor, all part of that energy group that's being hit. But I think they're part of the group, especially Marathon and Endeavor. I think they're part of the group that could benefit from lower oil prices. These are the refiners. And what's interesting is, along with Valero, Marathon, and Endeavor triggered oversold buy signals in Chaikin Analytics today. So I think that this is an example of stocks that are in uptrends that have pulled back where you want to buy those pullbacks. Take a look at Marathon, take a look at Endeavor, take a look at Valero. I think that they are pulling back to give you a nice entry point within a solid uptrend. So now let's move on kind of to my themes from my note today for Chaikin Analytics subscribers. Technology has been strong, right? You heard me mention it. It's up nearly 30% over the past 12 months. It's actually on the verge of a breakout. This is the XLK, the technology ETF. You can see, no one's going to argue that this is a solid uptrend. It's pretty textbook, above the rising 50 and 200-day moving averages. The RSI is overbought, but recent action confirms the bullish price strength, so that is encouraging. And Chaikin money flow is solidly positive after having turned bullish in early May. So, for tech in general, I think the trend remains higher, but it's important to know what's driving that. And currently, that's internet and that's software. There are actually pockets of weakness in technology that are being maxed by overall tech strength, that I think if you're looking for ideas to hedge your portfolio or hedge your exposure to technology, you can do some exploring and do some work. And one of those is telecom, which looks vulnerable to me. This is the IGN, the multimedia networking ETF, relative to the SPY. So, and we can see that it's been choppy over the course of the past 2 years. And I think we're actually going to test and eventually shoot through the 200-day moving average here. And here's why. The RSI is shifting to bullish ranges. This is the RSI of the ratio after it made a negative divergence here with these recent price highs. And interestingly, as I dig into Chaikin Analytics, IGN has only 3 bullish or very bullish stocks versus 8 bearish or very bearish stocks. That's the based on the power bar. So I think the potential for further weakness in telecom on a relative basis is there. I think if you have outsized exposure to the technology sector, maybe you want to look for some telecom names to prune from the portfolio, or open on the short side to kind of hedge that exposure, given the run that technology has had over the past 12 months, up 30%. So one of the names that I'm looking at there as a potential short candidate is Corning. Ticker symbol is GLW. It does have a bearish Chaikin power gauge rating. It is lagging the SPY, so the dynamic duo is in gear to the downside now. The market is in agreement with our model. Stock is currently overbought based on our overbought, oversold indicator, and Chaikin money flow has been mostly bearish this year in 2018. Finally, the stock has rallied back to a falling long-term trend line. I think that opens the door to a trade to the downside here. I think the rally, if it could fade here as the stock trades into resistance at the declining long-term trend line. I think as long as Corning is below $31, the door is open for a trade down to the $23 level, really. So as I said, this is part of that telecom group that's showing relative weakness against the S&P 500. I think you want to be in tech, right? I'm not saying you don't want to be in tech, but I'm saying you want to be in the right parts of technology. You want to continue to look at those strong software names. You want to continue to look at those strong internet names. But there are pockets of weakness in that sector, and this is one of them, Corning to the downside. So here, just kind of taking a look now, as we do every day, at how the sectors stack up based on the power bar. You can see healthcare, technology, and discretionary remain in the top 3. We were watching materials yesterday. They actually flatlined now. 5 bullish or very bullish stocks, 5 bearish or very bearish stocks, and with the uptick in the SPY, materials now falls below. I mean, it's a one-day event. We'll keep an eye on it. More importantly, from a sector and thematic view, real estate, consumer staples, and utilities remain the bottom three. So this is where we don't want exposure here. We want short exposure here, if anything. We want to prune these weak names from the portfolio. You want your exposure in healthcare, tech, and consumer discretionary. So every day you can get these ideas and more as a PowerFeed subscriber. www.chaikinanalytics.com/PowerFeed TV. Thank you, as always, to Stock Charts TV for hosting the show. Have a great day, everyone. Happy trading.